Good morning, ladies and gentlemen. Welcome to the show. Listen, I'm glad to have you guys here on this Friday, September 4th, 2020. Now, here, listen, guys. Of course, Monday I won't be doing a show. I just want to let you know that. And yesterday, I got caught with my pants down. I'll tell you, I've been waiting for this Chinese digital currency to come along for a long time. Waiting for it. Well, I knew it was coming, right? I seen that. I said, oh, this is it. This is it. I said, I'm going to put it on my show. Got caught with my pants down. But it is coming, guys. It is coming. The Chinese digital, the real thing is coming. And, you know, you might see a massive movement of liquidity into it if they can get it out first ahead of the American one. You know? Anyway, moving on with the markets. Listen. For the last few weeks, I've been telling you guys a big drop's coming in the market. I think it's starting now. The big drop. What I want to say about this is, I don't think the Fed's going to let this go very far. They might even stop it today. If they left this unchecked, and they just let it go, it would completely collapse. Everything, the markets, everything would collapse. The world would collapse. They can't let this go. And I'm thinking to myself, they won't let it drop more than 5,000 points before they react. And probably not even that much. They might even react today if it continues to fall. They might pull the plunge protection team out in the stabilization fund and all that. You know, they're gonna support these markets because the alternative. I'll tell you what, guys, I'm going to do a show on my other channel, and I'm going to talk about what the alternative would be if the Fed decided to withdraw all support. I'm just going to talk about it, what would happen on my channel, the Delta Report, you know. But they're not going to they're going to come in. You watch, they're going to come in. And they're not going to let these markets drop too much. They might not even let them drop 2,000 before they come in with support. Okay, so I'm looking for that. Anyway, listen, guys, let's open up the charts right here and take a look at what's going on. Today, we're taking a look at a silver price. It's up 2 cents. Silver and gold right now probably are one of the more stable asset classes out there right now at 26.61. Nothing's stable anymore. You're walking on quicksand. Where do you put your money? Gold and silver it might go down a little bit, but it seems to be one of the more stable places to have your money right now for wealth preservation. Because the system right now is basically lost it. They've lost it. They've lost control over the system. And the ramifications, there's only two roads they can take, deflation or inflation. Now, I'm going to talk about the deflation road. And, you know, there is a possibility it could go deflation. But it would be absolutely horrendous. And I'm going to talk about it over on my other channel, the Delta Report. I'm going to do a whole talk on that, probably this afternoon, maybe tomorrow, about what would happen if it went deflation. And why I don't think it's going to go deflation is because of the major ramifications of what would happen would be, I'm going to use the word catastrophic if they let it go deflation. Inflation, if they go the inflation route and they just keep pumping up these markets forever, it's not going to end well, but it would be much better option than the deflationary option. Much better, you know. Okay, here's the silver price, 26.61. Let's take a look now at gold. Gold, $1,924. It's down $6.60 now. Oh, silver's holding a little bit better today. Silver's on the plus side today. Even though it's not by much, but it's still, gold's down $6.60. They're almost out of silver, guys. I mean, they're almost out. They haven't got much left. Now gold, you know, they can dip into inventories because they got a lot of gold stored away in vaults and things, you know, but not silver. And silver's needed, very needed in industry, you know. Let's take a look now at cryptocurrencies. 344.9 billion. Bitcoin dominance of 56.4%. Bitcoin hasn't been doing so good. been barely holding its head above 10,000, 10,517 today. It seems to have stabilized. It was heading to break down below 10,000, and if it had broke down below 10,000, it would have been quite a long drop to find support. There is a very strong line of support, extremely strong line of support on Bitcoin at 6,500. But let's not even talk about that. Anyway, okay, Dow Jones Industrial Average today. And we're looking at a second day drop of 547 points so far today. Just let me refresh the page. 543 points today so far. This is the second day drop in a row, substantial drop in a row. I think what you'd see right now is the Fed's getting very, very tense. They don't like this. And don't like it is an understatement. They're probably getting very, very tense and wondering when they're going to step in. And they're probably thinking to themselves, well, if the market goes back up, we don't have to step in. Let's just hold back a little bit longer and see what happens. It might go back up. They're thinking to themselves, let's not step in unless we really have to, sort of idea. And so we might see the market go down a bit lower before they step in. They're going to step in at a certain point, though. And they probably already have the contingency plans in place to step in. Probably already, And I don't see them letting it fall more than 5,000 before they step in. And, of course, the more things collapse, the more they have to step in with greater pressure to bring it back. It's like one of those things when it travels too far. It's kind of like your car. If your car was running off of a hill by itself because you didn't put the emergency brake on. The longer and the more speed you let that car gain when it's going away by itself, the harder it's going to be to stop it. It gains momentum, and that's the way with this. When we get a collapse in the markets like this, it gains momentum, it gains traction. So the further they let it go, the more stimulus it's going to take to stop it. And they can't let it go because I'm going to say it again, to let everything go into deflation right now would be catastrophic. Worldwide, catastrophic. To just stand back and let it all just collapse. Because it would. It's all a bunch of dominoes. The bond market, the yields would go up 5% on the 10-year, 10%, 20%, 50%. It would go up like that. That's what the yields would go up like, and the bond market would crash. And all the other markets would crash too. The stock market could go all the way down to 5,000. And businesses, everything would just basically stop. It would be absolutely catastrophic. And I'm going to go into a real detail about how catastrophic that would be and why they can't let it go that way. And so right now, they're sitting there watching from their ivory tower. They're watching this market fall, and they're saying to themselves, what are we going to do? When are we going to step in? I don't think they're going to step in just yet, because we've only seen a 2-day fall of about 1,200 or something. No, 1,300 or 1,400 or whatever. It's not real big yet, And so they're probably watching it very carefully, though, I imagine. Let's take a look now at crude oil. It's down $1.54. Now, see, crude oil is showing you what's going on. It's deflating right now. That's 3.72%. And this is the first time for a while now it's dropped under $40. You remember during the crash earlier this year, how low crude oil went? Negative $40. Means they give you $40 to take a barrel off of their hands. A fella could have really made out good during that few days there when it was down below zero. If he had a big, giant container to put it. Like if a fella had a big ship or something with a big tank on board or whatever, Fill her up, boys. Anyway, and pay me. Oh yeah, $40 a barrel. Thank you very much. And I got my ship full of oil, all free. Plus, and what did I hold? 20,000 barrels on board my ship, at $40 a barrel. Plus, it's all free oil. Now he's outsold it for $40. Oh man, he would have made it like a bandit, wouldn't he? If some guy had a big ship, empty ship. U.S. Treasuries. today. We're looking at yields. Oh, this is some substantial yield rise today. And this is what would happen. We see the market starting to fall off, and what do we see? We see these yields uncontrollably rising. But if they didn't step in, this would not stop. These yields would go nuts up. A crash in the bond market. And this is one of the biggest markets of all. This is bigger than the stock market. And this is making them nervous too. When you see a 10-year rise 6.3 basis points today, it's at 0.685, that is really upsetting them too. And they're watching this very carefully along with the market. The U.S. 30-year, 1.42. It's up 8.2 basis points. This is the tendency right here. You know, now if they let the deflation continue and they were to let these markets fall, the dollar would go up in value tremendously, and there would be a scarcity, a shortage of dollars. And, you know, what we would see is we'd see these yields rise and rise and rise. And the dollars would dry up from the system so fast, it would be like hot spit on a really red hot stove. Just that's where the dollars would go. The dollars would just disappear from the system. That's what would happen. And of course, you know, it would be because the system is so over leveraged. It wouldn't be like 1929, the 1930s, when the dollar became scarce, you know, and people would work all day for 50 cents. This would be worse. This would be worse if they were to let this go unchecked without printing. If they were to say, okay, we're shutting off all the printing machines, that's it. Just let her go, boys. You don't realize, people don't realize how bad that would get. They have to keep printing. And they have to keep printing ever more, bigger, greater amounts in order to keep all this. Because this is a Ponzi scheme. We've set our whole monetary system up as a Ponzi scheme. Crazy thing to do. I know, it's crazy. Why did we do that? Why did we let them do that? I mean, it's just it's crazyville. But there you have it, you know, and we might escape from this thing with some sort of new monetary system and a reset if we continue to follow the inflationary path to its very end. And we don't deviate from it. In other words, we just keep printing. We might all be able to escape from this thing in some sort of it's not going to be good, it's not going to be pretty, but at least we'll escape. But if we let it go deflation, I mean, it's catastrophic, and it will come right away, and not see, if we continue to print, we might be able to stretch this thing out for a couple more years, and at the same time escape from it without a complete holocaust of damage. You know, we might escape from it with just a moderate degree of damage. But if we let this thing deflate, it's catastrophic. I'm just, you know, you've heard me say that a lot during this show, but it is. And this is why I don't think that they can even think about letting it go deflate, because it would just close down everything. Okay, U.S. dollar index. 93.03 for the U.S. dollar index, and it had a little bump up. Now it's starting to drop off again. Okay? Listen, you guys, thank you for listening to the show. Like and subscribe. I think it's going to be fun for me to actually do that show over there on the other channel about deflation, because I don't believe it'll ever really happen. I don't believe they could possibly be that stupid to let it happen. And so because I don't believe it happened, you know, I'll have a bit of fun theorizing about what would happen if they did let that happen. If you get what I mean. But I really don't believe they'll ever let that happen. And I'm thankful, because it would be so bad, you know. And I'm going to discuss it, though. I'm going to go into detail about it over there. If you guys haven't got my other channel, the Delta Report, all you got to do is just on your search engine on YouTube, just type in the Delta Report, and you'll see my mug. You'll see me there, you know. And subscribe over there, too, if you haven't subscribed. And we'll catch you guys later. Bye-bye.